Hi, Chris Sorensen, founder of Help. Now, I need to give a disclaimer. I'm talking about some very serious issues right here with respect to insolvency, bankruptcy, cancellation of indebtedness income. In fairness to those people that support me and finance our program, I need you to know that I'm not giving any legal or tax advice, and that each and every one of you need to seek the counsel of a tax professional, either an enrolled agent with the IRS, a certified public accountant, or a tax attorney. Now, with that said, I'm about to share with you some information that will help you become more discerning or a better interviewer when you are talking to people about, hey, can you please explain to me what type of tax liabilities I'm going to have when I don't pay back my lender in full? Again, by repeating, you need to understand whenever you don't pay your lender back 100 cents on the dollar, whenever money you borrow, that's referred to as cancellation of indebtedness income. And it's reportable income on your IRS Schedule 1040s. Now, whether or not you pay tax is a different story, and you will use IRS Form 982. It's a worksheet that you'll utilize in order to determine, do I owe taxes or do I not owe taxes? And if I do, to what extent and how much? One of the things that you need to be aware of when you're talking to your CPA is ask them about the Internal Revenue Code, Section 108A1B. That's IRC 108A1B. This defines, or discusses, I should say, insolvency. Insolvency is a little known ruling by the IRS that is defined as follows. Insolvency is the excess of one's liabilities over the fair market value of their assets. Now, the determination of your level of insolvency must be made immediately before the discharge of debt or the taxable event. If that doesn't make sense to you, look at it this way. It's got to be done. You need to determine the fair market value of your assets before you close escrow on a short sale, before your home goes to foreclosure, or before you receive a principal reduction and modification. It sounds more complicated than what it is. Think of it in these terms. If you were to take a sheet of paper, draw a line down the middle, and put a plus on one side and a minus on the others, on the plus side, you're going to be adding up all of your assets, and you need the fair market value. One person that can help you is your Help certified professional who will give you what is known in the business as a competitive market analysis. This is going to say and dictate what your home's current market value is. Now, you're also against that are going to be checking your liabilities, which of course is the loan amount that is on that asset. Also, you can go to Kelley Blue Book online or its equivalent and determine the fair market value of your auto. But please be advised, in discussing this issue with the Internal Revenue Service, you need assistance because you need to factor in all of your assets. That's going to include any type of heirlooms, any stocks, bonds, 401ks, retirement accounts, etc., including but not limited to socks, underwear, the forks, the spoons, the knives in your drawers if they have any value. In a worst case scenario, if you were to be audited, think of it in those terms, you want to know and be able to document what was the fair market value immediately before the discharge of debt of all of your assets compared to the liabilities. So once again, if you add both of those columns up, to the extent that your liabilities are greater than your assets, you are technically insolvent. Now think about that for a moment. You didn't file bankruptcy. You've had a taxable event, and let's say that you sold your $200,000 home, but you owed $300,000 on the loan amount, and the lender cooperated. That's cancellation of indebtedness income of $100,000. But if you are technically insolvent by $100,000, yes, you have to report that $100,000 as income, but utilizing IRS Form 982, you can offset it with your level of insolvency. So there's a little gift for you. You make sure you talk to your CPA, interview them, confirm what I'm telling you, but it's right there in the Internal Revenue Code, and it's there for your benefit. Now, in some cases, you may not be covered. You need to have the expert assistance. So please don't try to do this on your own. Thank you for watching.